Now we're going to kick over into the export market, and we're going to look at the U.S. and then we're going to look abroad to see what is changing. And we took some of the stuff out, and we'll talk about it more in the OPEC show, which is going to come out later this week, where we're just going to look at what did OPEC say, what is their month-over-month supply, what is their demand numbers, what are some of the changes that we've seen over the near term. Just to put that into context, just because, there's some adjustments. Saudi Arabia is talking about rolling back some of their voluntary cuts, which we talked about last week, and we're writing the report on today that goes out on Friday that just looks at the amount of activity where exports are increasing. So obviously they're looking to backstop. So getting to the export numbers right here, you can see gasoline is up, fell by about 161,000 barrels a day. It was something that we've been saying was going to come down, be fairly flat in general, or what was expected. Not too much to say there. Distillate, again, fairly flat. LPG is the one that we think is going to have some more upside over the near term, but there were timing delays. There were fog issues. There were problems at the along the coast and in some of the channels, which restricted movement last week. It's kind of hard to tell how much is going to be impacted in which direction most of these boats are flowing, because if they take it from two-way traffic to one-way traffic, based on who was there first and who has the right of way, will adjust if it's import or export. So clearly you can see that it was all export oil. So we had the exports were up to increase 1.245 million barrels a day, bringing us into almost 3.9 million barrels a day. Net. That's year over year up 298,000 barrels, 5-year average up 1.7. So clearly, a lot of crude was exiting our system, going to the international market. The question is going to be how much is that going to continue? And as we said last week, because just to be clear, the physical market trades 6 to 8 weeks out. So if you buy today, you'll do it for loadings in the coming months, the coming next few weeks. So again, it's just going to come down to timing, and we've seen purchases slow. February flow into Europe, and then that bleeds into March, is supposed to be at a multi-month low. Something very similar into Asia. As we keep talking about, the paper market and physical market continue to be against each other, where the paper market is well ahead of the physical market. Now, this could be the paper market front-running inflation. This could be, obviously, the dollar's weakened. It's now kind of stabilized as rates continue to go up. So that has pulled some of that front month down. But again, the physical market is where we keep seeing some of these cracks as to how much oil demand is in the market at the moment. Then when we look at gasoline, we were expecting it to remain above that 9-year average. Instead, it fell below. Again, that's due to timing delays. And unfortunately, just because of all of the issues in the market today, these timing delays are not going away. We will see either a big drop or increase depending on direction. But, based on what is happening over the next few weeks, we should see a drop in exports over the next 14 days. Distillate, we were saying that it was going to flatline, remain well below that 9-year average, especially because we have so much distillate coming from Europe into the U.S. There's actually so much coming from Europe into the U.S. They've actually kicked some of it into West Africa. Again, the distillate market remains problematic as guys compete for a home. But usually the U.S. exports into Europe, and the fact that we're now importing for Europe just means that we're gonna have to find a new home due to these issues. That's going to keep exports depressed over the next few weeks. Crude oil exports, same thing. We were saying that it was gonna bounce, but again, stay between 2.6 to 2.8. Clearly, it's at 3.8, so we were wrong. It hit that new all-time high, but now we're going to get a big backdrop, and it'll come closer to. We think the previous that lower low in Jan, just because we're going to get that drop back down, that will adjust some of the numbers in general, just given where activity is. I just wanted to touch on propane. So propane continues to draw down. We had a draw of 2.9 million. You can see year over year, we're down 20 million barrels. 5-year, we're down 5.6. And that's where we have to start thinking about where are we going to see restrictions on days to cover, because For anyone that's been following Texas, they've now restricted natural gas flow outside the state. Force majeure has been declared on multiple pipelines and now one LNG facility, as LNG is being, natural gas is being preserved within the system. So there are gates that can be thrown up. It can be thrown up in propane, but it's typically a combination of what's in storage, what does future demand look like, what is the 20-day average, where are things going. So we're starting to see a little bit of normalization in heating that will slow down some of these draws. And you can see that even though we continue to see draws, we always do this time of year. Like, we always see draws this time of year. The pace has been strong. We're at the bottom of that 5-year average, but again, we normally see this, as you can see, against the 5-year. If this accelerates, that's when we'll start to see some concern or talk. But just given the issues in the market right now at Mont Belvieu with LPG exports, this will be a little wonky as well, and that will restrict some of these exports. Here you can see that we've been expecting it just to go sideways. We still think that that's going to be the case once we average that out over the next few weeks. Clearly, we're going to get some surges up and down as ships clear. Things kind of got back to normal following power coming back online. Now shifting abroad, just because EIA came out on Thursday due to President's Day, we do have the data this week for Singapore and Europe. Here you can see that there was a small decline of about 500,000 barrels in total weekly stockpiles. But you can see as to where was that driven. And middle distillate and light distillate, the two that we've been focusing on the most, actually had builds. So you can see the totals have just gone sideways. We're back within the top of the cloud. But just based on what we're seeing coming out of China, India, Asia in general, we have some concerns as to what is the activity going to look like in the near term, as we have light distillates now back and trending up, along the top of the cloud. Based on what we're seeing in Fujairah and other parts of driving demand, obviously, as we've talked about with China, it remains very weak. There's a mixture of seasonality and some normalcy in terms of where things are. Seasonality, Lunar New Year is always a slower period of time, but the question is going to be how much of that comes back to normal. Again, we think it's going to take some time to see some of the China specifically get back to that normalization. On the more concerning front, middle distillate is more of an industrial bellwether for how much industrial activity is happening. This is picking up some of those key the hydrocarbons. And here you can see that we've made a new seasonally adjusted all-time high, and we're now at a new 2021 high, record high, because we took out that earlier spike from the end of January. Again, these are why we keep looking at products, because there's pressure on the refiners. There's that demand on the back end of the products is depressing the runs because they can't push through increases. And that's also coming with the increase in feedstock pricing. Again, kind of balancing both sides. India has now requested that they increase total production to bring some of these prices down, specifically for India. Again, so there's going to be two sides to that story as we go forward. When we look at Europe, we've been saying that Europe is aggressively managing their gas oil. We've seen a drop in imports coming into the market just because they already had so much. They had some contracts that were expiring that is going to push that into the international market. So here you have where we have a huge slug coming to the U.S. We have more going to West Africa. The bigger issue remains gasoline for them. Gasoline still is still building, even though we have exports coming to the U.S. market. And this is really being driven by the lack of demand for gasoline within Europe, and then just the arbitrage opening back up, which will draw down some of that capacity in the near term. And here's just putting it into perspective. Gasoline is back at near all-time highs, and on the 2021 level, it's back above the peak that we saw at the end of Jan. Same with crude oil, as we were saying, just based on the back and forth between onshore storage, offshore storage. We saw the crude tanks just flatlining, and that's going to continue. We don't see much going up or down in terms of kind of where this is going to be over the near term in general. So there's not much to report on that level. Then when we look at Fujairah, so in general, Fujairah reported a decline of 329,000 barrels, coming in at about 20.9 million, which is an overall decline of 1.6% week over week. There's some positives and negatives mixed within this. So the draws, so middle distillate and heavy resid had some draws, while light distillate, again, gasoline had a build. Stock of light distillate saw a build of 208,000 barrels, or a 3% increase. And the problem is the east of Suez gasoline market was finding some support from the U.S. So again, we're going to see some of that flow, but we're just not seeing the demand in Asia, which is being reflected in Singapore and is also now being reflected in Fujairah in general. Then when we start looking at middle distillate, that fell by 238,000 barrels, which is down 5.4%. The gas oil market is fairly stable. Healthy supply is coming from China, as well as inflows from India and the Middle East. So again, there's going to be some competition back and forth, especially as Europe is now exporting into West Africa. That's going to kick back some of this Asian flow. So we should see not too much movement. We think it's going to stay fairly stable in the mid distillate side. And then when we look at resid, the decline of 299,000 barrels, or a decline of 3.1%. And so far, prompt spreads have been fairly tight, so there's not too much to say one way or the other. We think that that's going to remain fairly stable as we do have more shipments and cargoes moving throughout the world. On the other side, you can see here, Angola took up their estimated April loadings. The ones that we want to call attention to is Russia. So Russia remains elevated just in terms of where the flow is. Nigeria is right back up in Feb. That's bleeding over into March just because they haven't been able to clear. Angola was finally able to clear except for some spot cargoes in February, and they've now started, in March. And they've already started on April. The issue right now is Congo. Congo is still very slow to clear. They had 7. They've sold about 2. We haven't seen an additional sell-through, which is a problem in general for demand, which is what we keep talking about. The one that remains fairly strong is Norway. Norway has seen their bids remain elevated, but that is also starting to tighten, starting to decline as some of those bids are filled. The bigger issue remains Urals, which is continuing to trade at a 10-month low, which, again, the issue that we're seeing for Russia, specifically in Northwest Europe, as we do see some healthier bids coming from the North Sea into China, as we do have an increase in flow. But there's been less activity in the physical market, which is going to put more in storage and less in transit. So we're starting to see some of those conversions. So we're the ones to watch as we progress forward is going to be Angola, Nigeria, Congo, North Sea, and Urals, to get an idea of what is the health of the market. We've already seen U.S. exports slow, and we're seeing that happen really throughout the world. Crude oil in the water came down. You can see that it pulled back, and this is more driven by less oil in transit. Just, again, coming back to the limit amount of exports that have been happening in general. So because of that, we've had a reduction in just the amount of oil on water. But when we look at oil in transit, this is what we've been talking about, and what we were expecting for the most part was a movement along the 5-year average. So we had the spike, and now we've come down for the most part, and we think we're just going to go sideways. Based on what has been sold from the North Sea into China, we will see a little bit of a recovery there. But you can see here, based on what we've been saying, that floating storage has essentially flatlined. And just what we're looking at this point, we don't see much changing on the floating storage level. And just based on the amount of cargoes heading to China, we do expect that we will see an increase in floating storage, specifically in Asia, as we go through the next few weeks. The time spreads is looking at just March 1st, April. You can see that they remain elevated in general as we go forward. We've starting to see some of the time spreads roll back a bit, just because we've had some pressure in the front months as we go into pit close. But again, it's still elevated. It's still pulling from storage, and we're starting to see some normalization as Saudi brings back more cargoes. One of the bigger issues that we continue to see is some of the pressure on crack spreads, and it's just going to shift. What are people buying? What is going to be the demand in general? So here you can see that Dubai hydrocracking remains the best crack at the moment, or the refinery margin, where the hydroskimming, again, coming to the gasoline problems we're seeing, gasoline remains the biggest issue, and as that bleeds down into middle distillate, we're just not seeing the demand on the product side, which speaks to, again, that slowdown on just general demand for oil as we go forward. But putting it into context, because when we talk about the hydrocracking margin, you can see that we're still well below seasonal norms, as the seasonal average is usually at about $3, and we're currently trading at about 64 cents. So again, there's no incentive for Singapore and a lot of these other Asian markets to crack crude. They're going to try to sell from storage, but even while trying to sell from storage, they're still building storage. So again, there's this dichotomy of what is the physical market saying versus what is the paper market saying. And then beyond that, what is the oil market saying versus what is the refined product market saying? As we look into the Mediterranean and looking at Urals, you can see the pressure coming into the Ural market in general, as all margins track lower, especially the bottom two of FCC and the hydroskimming, again, speaking to just a mixture of everything, where this is something that one of the reasons why Urals continues to trade at a discount, just because there's a lot of sulfur, there's a lot of things that you have to do to remediate and blend. And with the availability of Libyan crude, West African crude, Urals is struggling to find a home, so they're pricing themselves into the cracker. And here, even by competing to get in there, you can see that most of them are trading negative at this point and will struggle. Super tankers heading into China, it's pulled back a little bit, but again, you can see still remains at a 5-year high, seasonally adjusted. This is going to result in more just sitting on the coast. The numbers haven't updated because of Lunar New Year, so we'll get back to showing you the updated numbers as we go through next week. Asian floating storage remains flat. This is going to continue to trend up as those cargoes show up. China remains slow to act, just as we saw December, January crude imports come down. So far, early estimates still have them coming down, but again, there's a certain amount of seasonality in that with Lunar New Year. India remains fairly stable, where we see slowdowns in Japan and South Korea, just driven based on not only just COVID, but just general activity on the economy front. North Sea, we were expecting that drop along seasonal norms. We had it. It was here. Now, we based on what the sales are, we think they're going to start to creep back up. But just based on the activity, the tightness in this specific grade on the Platts window, we've seen some cargoes cross. There's less bids now showing up, so that'll start to put a little bit more into the floating market. But again, we don't see much changing from that 5-year average. West Africa. Here you can see where the Angolan cargoes and some of the Nigerian cargoes finally cleared. Now that is still finding some difficulty moving into the market. So while it bounced and hit the 5-year average, this is one that's going to go back to the top of the cloud and continue to struggle to compete. Middle East, we have an increase and when you look at it's at the top of the range when you kind of take out some of the noise from the top. But this is going to continue to trend up just based on Iraq is producing above their stated goals, above the OPEC goals. I know, Iraq cheating, shocker. So Iraq continues to cheat in terms of the OPEC deal. Saudi Arabia is increasing exports by month over month. They're up about 500,000 barrels a day. Libya is up, even though they had some strikes that have now been appeased. They're increasing by about 50 to 100,000 barrels. So again, there's just more competition, which is leaving some of this Middle Eastern crude in storage. And this is something that it's already reflected the increase, and we think it's going to trend higher, but not at the same level. Europe, as we were saying, just given what there is some space onshore, so there's not a huge reason to keep it offshore. So this is still going to track towards the bottom end of that cloud, especially because there is more than enough crude available on the spot market. So there's really no reason to pay for floating storage. So again, there's going to be some, this competition is going to remain in the market and be fairly interesting as we go through the remainder of this week and into next week, and to see how quickly we can get some of this activity normalized in the market, given, power outages, Texas, refining in general. So stay tuned. We have our OPEC show that's going to come out later this week. We already had our econ show. Please watch it, support it, share it. We cover a lot of important data that relates to energy in general. And then obviously on Friday, we have our favorite, the Primary Vision Frac Spread Count. And surprise, surprise, I will guarantee you the Permian is down by a lot. So, stay tuned to find out by how much and what does that mean for the next few weeks. So again, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Thanks again for watching.